Good day. Today we're going to look at the balance sheet, and in this specific question they also want us to do the ordinary share capital note and the retained income note. These two notes often there, as well as maybe trade and other payables or receivables and the fixed assets. Those 5 notes you should know very well. Chances are very good that they may form part of all the questions that you get. So let's look at first of all the ordinary share capital note. Now, ordinary share capital, it has, it always starts, or it's got a column on the left for a number of shares and a column on the right for the value. But the note starts off with whatever the authorized shares are. That is not a figure, it is just a number of shares. So it's just information, but it must be in the note. So if it's not printed like on this one, make sure you put it in. Somewhere in the information, they will tell us what the authorized shares are. And if I look at number B, business has authorized share capital of 6 million shares. So that is where that 6 million comes from. Then we move on to the part where we actually will have the information or the values, and that normally will start off with the opening balance. And then we will have the number of shares in issue at the beginning of the year. Just fix it quickly. So it's going to have a first column where we put in the number of shares. So we're going to have a number of shares in issue at the beginning of the year and the value. To that, we're going to add whatever number of shares were issued during the year with the value, and we will deduct whatever shares were bought back with the value, and that will give us the number of shares in issue at the end of the year with the value. So those are the things we're looking for. With this one, there's one line not there, so maybe they did not issue or did not buy back shares, but we'll find that when we do the actual question. So let's go to the information for share capital. First of all, on the list of balances, they give me ordinary share capital 1st July 2016. Our year end is 30 June 2017, which means this was the balance at the beginning of the year. They don't give me a number of shares. They just tell me the value of shares in issue at the beginning was 3,150,000. So I can put that in 3,150,000, and that was the number of shares in issue at the beginning of the year. But I must get a number of shares. I've got the value, but I haven't got a number yet. So maybe there's some more information. First one there just tells me that there's 6 million authorized. No, nothing of that in the values. But the second bit, 70% of this 6 million were in issue at the beginning of the year. So 6 million is the number, 70% of that in issue. So 70% of 6 million will be my number in issue. So if I take 6 million and I multiply that by 70%, it gives me 6 million times 70%. Let's just see where. Gives me 4,200,000. So number of shares in issue at the beginning, 4,200,000. Good. To that, I said we're looking for new issues or buyback. The next thing that they tell us, 60,000 ordinary shares were repurchased, bought back from a disgruntled shareholder on the 1st of December, and they paid R3.50, and that was done on the 1st of December. So no mention of new ones issued, but we did buy back 60,000 shares. Remember, buyback makes the number less. So I bought back 60,000 shares. Shares repo. And now I've got to be careful. I cannot put in the value that I paid for it. I must work out the average price. The average price per share would go to the ordinary share capital, and what I pay over and above the average must go to retained income. So I must first go and calculate what is my average price per share. To do that, I go to whatever shares I have at this stage, which is 4.2 million, and the value. Work out a value per share. I must take the total value divide by the total number of shares. So it is 3,150,000 divided by 4,200,000. And that will give me the value per share at this stage. So it's 3,150,000 divided by 4,200,000, and that gives me 0.75. So it's 75 cents. So say 60,000, and they were repurchased at an average price of 0.75 each. So if I do the calculation, 60,000 times 0.75, it will give me 45,000. So I must minus 45,000 from the 3 million. And that is the only information I've got, so I can do my final calculation. So it's 4.2 minus 60,000 gives me 4,140,000 shares, number of shares in issue at the end of the year. And the value would be 3,150,000 minus 45 gives me 3,105,000, which is the value of shares at the end. And that is all we need to do for the ordinary share capital note. We can now move on to the retained income note. The retained income note will always start with my opening balance. In this case, it's already printed, but we should also find it on the list of balances. To that, we add the net profit after tax. We deduct whatever extra amount, in other words, over and above that average that we paid for the buyback of shares, over and above that amount we will deduct, and then the total of our share dividends, interim and final together, and that will then give us the balance at the end. So let's put in what we need to do in this note. Make sure you always know what the layout of the note is, what should be in the note. So this is the net profit after tax that I must add. I must also add deduct repurchase of shares, and I must deduct the ordinary share dividends, but it will be split between interim and final. Good, so now that I know what I'm looking for, it may make it a bit easier. So the first thing is the net profit after tax. If I look at the information there, there's nothing to do with the net profit in there. Go through the notes under F. They give me the income tax. They don't give me the profit, but they give me the income tax. So the net profit after tax, if I've got the tax, I can then calculate the net profit as well. Remember, if we think about our income statement, before tax would basically be 100%. The tax itself is the rate that they give me, and they said it's 28%. So before tax minus tax gives me after tax. So after, within 100 minus 28 gives me 72. Now if they give me one of the figures, they gave me the tax. They told me the tax is 408,800. 408,800. So then you can use the formula by saying, okay, I'm going to take the 408,800 and I'll multiply that by above the line. I will put what I want. I want the after tax, and that is 72. And below the line, I put what I have at this stage. I have the tax, that's 28. So if I've got that one, I can, and I want to calculate that one, I simply take what I want over what I have. If I want that one, I'll take what I want, 100 over 28. But in this case, I want the 72%, so I'll take 72 divided by what I have, which is 28, and that should then give us what is that amount? 408 times 408, 1051, 200. So my amount after tax is 1051, 200. It makes it more, so I will add it, 1051, 200. Okay, in the next one, we will continue with the